So, welcome back, everyone. Today we have with us George Sakalidis, the Managing Director of Magnetic Resources with ASX ticker code MAU, Mike Alpha Uniform. As a founding director and seasoned exploration geophysicist with over 30 years' experience, George has a proven track record in discovering and developing significant mineral projects, driving magnetic resources success in Western Australia's gold sector. So, George, we did a report on magnetic resources last year, and I briefly remember that the heading was something along the lines of one of Australia's highest quality gold projects. Am I right?
Yeah, both in size and grade. We were second highest grade open cut in West Australia, greater than 1 million ounces. Yeah.
Wow, that's tremendous. Well, look, I'm excited to have you back today. We've got some, I know you have some exciting updates for us. So let's start off. I mean, can you recover and tell us what Magnetic Resources is about and what's the main focus for the company right now?
Magnetic's been actively drilling out its project over a number of years with fantastic reward. We've had 1 or 2 drill rigs, diamond rigs, on site for the last couple of years. We currently have 1 on site as well. So over the next month, we expect to do a significant resource upgrade. And previously, we had a total of 1.9 million ounces in total. We think it'll break the 2 million ounces, and I can't really tell you by exactly how much, but we'll know within a month. The other thing we're finishing probably within 2 months is the full feasibility study, and that full feasibility study has taken 1.5 years to complete, and that's a big thing for the company. We'll also have our mining leases approved. In the background, we have ongoing discussions with our neighbours, potential M&A, but also with bankers looking to provide finance. So that's happening. And I guess the main thing is we're looking to commercialise this deposit, and we know the economics will be sensational.
Excellent. Well, look, I want to move on to what's really important here is, so Lady Julie North, number 4, has grown really fast. And what makes this deposit so special compared to others in the Laverton region?
Okay, well, it's a big deposit now. It's got strong continuity. So when you plot up all the gold intersections, it's continuous over 750 metres, but also continuous down to 1 kilometre at depth. So it's very significant package, between 15 and 20 metres thick, very consistent. We also see very high ounces per vertical metre. So between 100 and 300 metres, it's 4,700 ounces per vertical metre. So it tells you that this continuity has a very good gold associated with it. And we're looking at producing over 150,000 ounces per year, which is really a standout. Most of our competitors are doing much less than that.
So you're expecting to do 150,000 ounces per year. So on average, what would be considered already optimal for other gold mines?
Look, they're all different, but people in the position we are, generally, it's around 100,000 or less. So we will stand out as being, I guess, number 1 in that category.
So yeah, I mean, so 150,000 compared to your average 100,000, that's 50% more. And I got wind that also the deposit is also quite shallow and open. Is that correct?
Yeah, the main deposit starts from 30 metres. The 2 nearby deposits start from surface. So one of those is called Lady Julie Central.
Yes.
They're only small, but they'll be mined first and effectively pay for part of the pre-strip of the 30 metres of cover over Lady Julie North 4. So it's all laid out in some sort of sequence. But yeah, so they're not very deep. They start close to surface.
Excellent. Now, I want to go on to this particular slide here. So look, I know that you've delivered over 14x resource growth at Lady Julie North 4 since 2022. I mean, how much potential do you see really, especially at this depth?
Look, we've grown at a tremendous rate, and
Mm-hmm.
you'll see when we refer to some of the other figures coming up
Yep.
that this will certainly keep going. Yeah, so we've kind of systematically worked it out. We didn't really know what to expect. But currently this deposit, Lady Julie North, was 1.55 million ounces at
Mm-hmm.
2.2 grams per tonne. There was only 0.1 million ounces about 3 years ago.
Excellent. And I guess when you said, what is it, 2.2 ounces per tonne, is that correct?
Yeah, 2.04 grams per tonne, yeah.
Yep. I mean, how does that compare to your competitors?
Yeah, so like we said, we're number 2 in terms of grade.
Mm-hmm.
Most of the average grades are 1.3 grams in the open cuts, greater than a million ounces,
Okay.
but ours is much higher, about
Okay.
2. There is one company that has higher,
Mm-hmm.
but all the rest are lower. So in terms of open cut, this is number 2, and which means it's going to make a lot of money because
And
it's
when you said number 2, are we talking number 2 nationally or number 2 just within Western Australia?
we've only recorded West Australia, but I think the average grade, I can't really, we haven't done the analysis for the whole of Australia.
That's okay. But number 2 within West Australia, which is one of the biggest and the most, I guess, desirable gold mining tenements in the world, right?
Yeah, that's right.
Brilliant. And can you just elaborate a little bit more along these graphs, how it's trending in the right direction and what it really actually means for our viewers and our investors?
Okay, it just tells everyone that we've been improving the size of our deposits.
Mm-hmm.
The pink and red is Lady Julie North 4.
Okay.
The red is the indicated category, and the
Yes.
pink is the inferred. So you can see we've increased the indicated category quite a lot, which
Mm-hmm.
means that it will be able to go into a reserve as part of the feasibility study. So that's why we spend a bit of time and effort doing infill drilling, so we can ultimately be able to use it in our economic study.
Understood. Thank you very much, George. So I want to go on to this particular slide now here. Look, some of the drilling results show, incredibly thick high-grade zones. Can you give us a sense of how this could actually impact the future mine plan?
Yeah, look, the southern part, the left-hand side,
Mm-hmm.
basically this is a long section through the main lode of Lady Julie North 4. So most of the gold is in this section.
Okay.
On the southern end will be in the open cut. So the open cut itself will be mined first, and then
Mm-hmm.
eventually we'll be mining um, the underground lodes to the north. Those two underground lodes, you can see they're quite big, and the one
Mm-hmm.
on the far right, the most northern, is actually getting bigger and bigger. When we spoke last, I don't even think we had that northern lode, and we're currently drilling beneath it, and we think it'll keep going. And that's where all the ounces will be added, and
Yes.
they'll be mainly underground ounces. So the lodes are thick, and in terms of underground mining,
Mm-hmm.
um, we'll be able to do transverse sections and stopes, which will permit higher extraction because of the way they're shaped. So a lot of the underground ore will come from those two lodes on
Sure.
the northern side.
And help us understand for those who are not too familiar with the thermal map here. So what are the pink concentration? Is that what is it indicating to us? The pink versus the green and the yellow.
Okay, this is a gram thickness map.
Mm-hmm.
A gram thickness map, basically you multiply the intersections grade by the thickness of that intersection, and
Mm-hmm.
when you contour it up, it gives you a much better idea on the total gold in that deposit. So you can see when we talk about 3 lodes, that you can see the pink areas,
Yes.
and they over 150 meters,
Yep.
which is a lot. It could be 15 meters times 10, or it could be 30 meters times 5 grams, and that obviously is the highest grade area, and that's where we've been focusing. So these maps themselves allow us to actually plan drilling, and you can see we've been drilling beneath the one on the right, and it seems to be increasing in size. So it's quite a nice way of presenting, but also helps us to understand where to drill.
Understood. Thank you. I'll just go on to this slide here. So look, your August PFS outlined really strong economics. What are the key improvements we should expect when the DFS comes out later this year?
Look, fundamentally, the big change is we're mining both open cut and underground.
Yep.
Previously, we were mining about 100,000 ounces per year. It was just the open cut. But now that we've included the underground, it'll be the 150,000 ounces, probably a bit more on average for 10 years, thereabouts. Clearly, we're trying to introduce the underground earlier, which will be favourable for the economics. Currently, the NPV in this version for the 100,000 was around 925 million. We expect that number to grow dramatically. I don't have the final number, but it'll be much, much higher. At the same time, the gold price, this was done at 3,200 Australian dollars.
Yep.
Currently, it's 5,250 or thereabouts. We will be modelling it at 3.6, but we'll be including sensitivities to show the economics at obviously higher pricing. And that's why we believe the economics will be incredible. I can't give you the numbers. Obviously, it needs to be finalised.
Sure.
But you're increasing the amount of gold you're mining it earlier, and you're adding a very large gold price. The other variable is the metallurgy, and our metallurgy is pretty good. Averages around 92% recovery, which is very good.
Yeah, that's high. So if I guess just looking at this, you're telling us that currently the net present value of gold is 925 million, but that's based on 3,200 Australian dollars calculated then, and now gold prices have surged. And you're advising us that basically if you go to production, the payback period, you'll break even within 12 months. Is that correct?
Yeah, these were the figures as of August last year.
Yep.
So the NPV will increase mainly due to 2 factors. It's the grade, and also the I guess total amount of gold and the grade, and obviously the gold price.
I'm going to be cheeky here, George, and say maybe it's time we should definitely upgrade the net present value on this slide.
No, we are as part of our pre-feasibility. So we can't, as part of our feasibility, this is the old slide, and we will be updating it, but we have to complete the feasibility to be able to update it.
Understood. But yeah, it's exciting numbers. I can see why you're so motivated. Let's go on to this slide now. So, okay. All right. So we had a bit of a conversation before we started this interview. You're aiming for first production in 2026. What are the biggest steps between now and then to stay on track?
Okay. Well, look, we've submitted the mining proposal to the Mines Department.
Yep.
We've also applied for 3 mining leases and 1 miscellaneous license to cover the whole project. Very close to finalising a native title agreement, which is a big thing. It's taken a little bit of time, yet we're very, very close. That will drive the granting of the tenements, and it also drive all the banks as well, because they'll need that finality. So once we have the mining lease approvals, we'll be able to start talking to the banks in earnest. Obviously, we're talking to our neighbours who are interested as well, but we're moving in both paths. You can see from that in the second quarter, we'll have finished feasibility. We would have costed and start talking about a decision to proceed, which will be in a late second quarter or early third quarter.
All right. I mean, look, I have heard through grapevine, there's been a lot of chatter that Magnetic Resources could potentially be a takeover target. What's your response on that?
Well, look, we understand that nearly all the other companies with significant resources have been taken over. I guess the last one was Spartan. That's the most recent one. There ain't that many companies with good grade, large resources near existing operations left. So we do expect M&A, but like I said before, if it doesn't happen, we're not afraid to go into production because we know the economics will be so good that it's very tempting to consider that option.
And if you do consider that option, when do we expect to be full into production? Is it still mid-2026?
It'll probably be early 2027.
Yep. Okay. And it's really not that far away then. Really, you're only talking about 18 months, right?
Yeah. I mean, look, you can make that faster by buying an existing plant. But if you were building it, it would be early 2027.
Excellent. So now, look, you're strategically located already near major mills like Granny Smith and Mount Morgans. How important is that for keeping your CapEx and timelines down?
Look, I think that's part of the, I guess in a way, that's part of the M&A. We're not actually looking at toll treatment. We're looking at, either doing it ourselves or the M&A option. This deposit is probably too big for a toll treatment operation.
Yep.
So you'd have to, regard it as, potential to fill up existing mills in its own right.
Yep.
We do have a lot of existing operations around us. Granny Smith, owned by Goldfields, the Mount Morgans mill owned by Genesis. Regis have a mill north of us. Anglo Ashanti have one to the south. So there's 4 big operations.
Yep.
But there appears to be strong interest from people not even in this district. So, yeah, we'll see how that ends up.
Understand. And look, finally, I'm really curious here, like, what are the key catalysts investors should be watching over the next 6 to 12 months? We spoke to you probably in the third quarter of last year, and it seems like so much has happened, so much news flow. So what are the hallmarks we need to be keeping an eye out for the next 6 to 12 months?
Well, we'll be completing the feasibility in the second quarter.
Yes.
Decision to proceed, which means the board will decide to move forward to production.
Sure.
Then you'll be looking at the engineering and procurement, getting the mine up and running. Obviously, the mining lease approvals and agreements, and looking at finalising and all the financial arrangements before the end of the year. So they're the things coming up. But in terms of actual what we're seeing, there'll be a resource upgrade, feasibility, banking, finance, or M&A. There will be a decision point where we'll decide, if we're not going M&A, we'll be pressing the button on the moving into production. So that is coming up.
Yep.
And then we'll be moving full blast into the construction. So those decision points are not far away.
And it sounds like the 2 possible paths are pretty shored up, right? In the sense that if it's either M&A, but it sounds like all of the financial aspects are quite positive that production is nearly a sure decision for the board without putting too much pressure on you.
Yeah, look, we can go into production. Banking interest is very, very strong. We know we would be able to go into production, and this will make a lot of money. Clearly, the economics a year ago were really, really good, and they've improved dramatically, as you're aware, with the gold price.
Yeah.
So we're not afraid to go into production. but we're equally, aware of our neighbours that, who need more material. We're happy to deal with them. If the deal is okay, then we'll go down that path. So it just depends. We can't predict it, but we're happy. I mean, look, the work that we've done to date includes a lot of mining engineering type work. So we're happy to move into production, but we can't commit to it today.
Understood. Well, look, George, as normal, if any of our investors or our viewers have any questions, I'll get them to email us info@sharesandvalue.com.au or info@eastcoastresearch.com.au, and we'll forward them through to your team, and you'll respond accordingly.
And that's fine. No problem.
Take care, George. Thank you so much for your time today.
Okay, thank you.
Thank you.